First, it's always great to be here at this conference. I had the chance to participate in the previous years. I will maybe start with a little bit of background about Steamboat. Steamboat Ventures is a venture capital firm dedicated to investing in media, convergence of media and technology. The name Steamboat Ventures come actually from Steamboat Willie, whose logo actually appears somewhere on the material. And Steamboat Willie was the first incarnation of Mickey Mouse back in 1928. And the reason for this is our fund only has one investor in the fund, and that's the Walt Disney company, which means that we have very special relationship with Walt Disney. We use this to look at investments and also to help the companies we invest in by bringing all of the assets and connections and support we can bring from working with the Walt Disney company. So web game is a very fast growing section of the gaming industry. It's still fairly small in China, but growing very fast. It typically caters to different demographics than traditional MMORPG games, usually more white collars. Very often it's more sort of a less immersive experience, so people might be playing this in the office. We've done quite a few actually in games. Our last three investments have all been in the gaming sector. It's an area we like a lot for several reasons. The first one, if you look at entertainment options in China, they tend to be sometimes a little bit more limited. Gaming is readily available, especially in second and third tier cities, where people can easily go to internet cafes to entertain themselves and spend time online games. Another reason we like it is because people are used to pay. So obviously the one challenge for media companies or anybody in the media sector in China is piracy and getting people to pay for content. On the internet, there is definitely a habit of not necessarily paying copyright owners and finding a lot of content readily available. And in games, just because of the nature, the way online games work, inherent in the business model and the way it works, there is a payment mechanism, and the typical model, as probably most of you know, is free to play, and then you pay for additional virtual items. And there's really a pattern of people that are getting used to paying a lot of RMB to play these games. The third reason this is a very exciting area that we like is, as I mentioned, this is in a recession. This is a type of investments that is typically recession-proof, or gaming tends to do well in recession because it's a very cost-effective way of entertaining yourself.
What's kind of your stance on new investments?
So we're definitely aggressively looking for new investments. We're absolutely not in a hunker-down situation. We still have a lot of capital available from our fund, so this is a great time to be investing. However, the reality is there probably still is a little bit of a disconnect between the valuations, where the valuations, given the reset of the markets, are and where probably we would like to see them. And I think if you go back to 2000, it took, in the public markets, the adjustment happens right away, but in the private market, it takes a little bit longer. And I think the reason is, if you're an entrepreneur and you've raised some capital last year at the valuation which was comparable to where the public market were, and you're coming back now to raise more money, and the venture investors are telling you, well, you have to take, your valuation is still too high, but in the meantime, you have doubled your sales, you have tripled your team, you have reached key milestones, you will not understand, why should I take, my value should actually have gone up. So, which is totally understandable. So I think it probably still needs both. We need to see the capital market recover a little bit and give more confidence that exits can happen again, and then you probably still have to wait for this adjustment period to happen. So we tend to, like our last investment was a Series A, so new investments, we tend to focus more on sort of new companies. We're still looking at companies that are looking for follow-on financing, but again, and maybe I'll look forward to hear from my colleagues, I think there's probably still a little bit of a disconnect on that front where we need to see the valuation readjust.